in the business, they wouldn't be bothered by. Hmm. So, what exactly are the income statements? What purpose do income statements serve? How are they helpful for a business? What do they tell about a business? Mm-hmm. Acha, a few points you mentioned. So let's take the example of shareholders or owners of the business first. So for owners of the business, they are concerned about two things. The first thing is that yes, majorly what's the profit of the business, and secondly, that profit at what cost, yeah, at what revenues. So all the revenues that you earn, all the sales that your business made, how much of it is eventually left in the form of profit. Okay, so this is the profitability of the business. So in users, we'll first write the owners, and owners, they are concerned about profits and profitability of the business because it's their money which has been invested in the business, and they want to see what profits their money has been able to earn on the amounts invested in the business. Who else would be interested in the income statement, and why? Very good. Why would the government be interested? So what would the government benefit from knowing, having that information? How would the government benefit? The government, they know, they want to see how much the profit the business is earning and accordingly tax them. Okay, if the business it's paying its due share of taxes or not. Acha ji, who else could be a user of income statement, and why? Employees of the business, because employees, they see that the profits which have been generated, eventually the work, it has been done by the employees themselves. So since they have been doing the work, and if they are doing a good job, for the reason of, from the fact that they are generating good profits and good profitability for the business, then they demand wage or salary increase, remuneration increase plus bonuses. So then, in order to demand that, for if a business is making losses, doesn't make sense to demand a wage increase or bonuses. But if the business is doing well, it does. Acha ji, managers, they would use the income statement because again they'll see the profitability, and they would see for their own business, for their own bonuses, as well as it is the job of the managers to create these profits for the business or to manage the resources of the business. So how well have they carried out their job? For their self assessment, they'll be using the income statement. Asha ji, who else? The suppliers and the customers as well. So mostly for suppliers, they'll what they'd be concerned with is, acha, suppliers, they'd look at all these people, all these stakeholders. It's that we have just discussed the income statement, so we are discussing from the point of view of statement of comprehensive income. But if we had discussed the statement of financial position as well, all these stakeholders, they'd also be looking at certain figures in the statement of financial position as well. Acha. From this particular statement, suppliers, they'll be looking at the revenue and profit. Why? Because this would help them determine whether they should give a business more credit or not. But practically speaking, yes, they'd be looking at these figures. They'd be more interested in the figures which are represented in statement of financial position, which we are about to study next. So they'd be looking at revenue and profits. Why? Because it would help them determine whether they can give business more credit or not, or if they want to continue doing business. So if a business is making losses, they'd be worried about recovery of the money that they have already given to the business in the form of credit. So they'd want. quick repayment of what they've already provided. If the business is making good profits, then fine, they can live with the credit they have given to the business. Similarly, customers, they know that profitability of the business, it would give them an idea of what the whether the business it would be around or not. If would so for example, if a business is making losses, chances are that the business it could wind up in future. So whether this business it would continue providing them goods or services that it is already providing them. Other socially conscious customers, they might also be looking into the fact that how much the expenses that the business is incurring, how much is for CSR, corporate social responsibility. Is the business all about earning its profits, or is the business also about spending something on the being a socially responsible citizen? Is the business acting that way or not? The other thing that the customers they might look at is that we are being provided this product by the business, how much profit is being charged, because profit, whatever the business is earning, it's charging that profit from the consumers or the customers. So it's customers eventually who are getting the who are funding the profit for the business. So the customers, they it would also give them an idea of how much they can push the business for a reduction in prices. Obviously, if business is running on thin margins, they won't be able to press more for reduced prices or discounts. But if the business it has got like a lot of, and again, this thing is easier said than done. I pick up the financial statements of Apple or Google, I'd see a lot of profit over there, but being a consumer, I won't be able to individually affect that a lot. I mean, asking them for discounts or something. But overall, in the long run, sort of idea can be generated in the market that they're exploiting their consumers too much or not. So that thing it can be addressed in the long run. In the short run, and by a few customers, this thing won't be addressed. Anyhow, from the customer's point of view, they will be able to see that overall how much is the business, what are the streams of revenue, what are the streams of revenue that concern these particular consumers, and how much profit are they paying for the products, how much profit are they paying to the business for the products they buy from the business. Okay. Acha, what about the limitations? Acha, anything in this, if you don't understand, please let me know. I'll try to readjust my explanation of that. Okay. Okay. What could be the limitations of using the statement of comprehensive income? What's the thing that's not shown, which you'd like to see, or what could be wrong about Acha, the first thing that we'll see that for financial information, any financial information that is presented at all, it has limited meaning if it's presented in isolation. So, for example, if I tell you a business has earned $3 million of profit, you'd not know whether this is good or bad. If in last year they earned 1.5 million and this year they earned 3 million, then it's good. If last year they earned 6 million and this year they're earning 3 million, then it's not good. So first of all, how much comparison is available, how much comparative information is available in the statement of comprehensive income. Usually I told you that we have got international standards which tell us how exactly to prepare different financial statements. So they give that for whatever financial information you present, you have to present at least 1 year's prior information with it as well. Okay, so if you say my profit this year is this much, you'll also have to simultaneously disclose what was your profit last year. If you're saying my revenue this year is this much, tell this about the last year as well, cost, expenses for everything. Okay, acha. But 1 year information. If you want to make some decision on the basis of this information, this is again too little information. First, you'd want more comparative information, as in information for more periods, and also for more entities, that fine, you have earned this much profit, but what about your competitors? Okay, so for that, what you'll have to do is you'll have to yourself do the effort and pick up the financial statements of different businesses and do the comparison. Just picking up the financial statements of one business, it won't give you that comparison. Acha, the second thing that limits the use of these financial statements or statement of comprehensive income, it is that preparing this sometimes it involves estimates. So, for example, expenses that business has incurred for which they do not have the exact amount. They know that they have incurred an expense, but they don't have the full amount. Do they overstate this expense? Do they understate this expense? Similarly, for certain revenues, sometimes they are also based on estimates. Okay, so the business, there'd be, just looking at the figures in the financial statements, you won't know until you go into the detail that how many estimates, what figures are actual and what figures presented in the financial statements are best estimates. Okay. Acha, so there is this issue of estimates, and sometimes there is a term also used called window dressing. Window dressing is simply fraud, putting fraudulent information in the financial statements, making the financial statements appear better than they actually are. That is window dressing. Okay. Acha. For all these users of financial information, if I look at, I combine that all these users, what are the different purposes for they are looking at the statement, income statement. The first thing that I can say about it is that they're looking at the income statement for the purpose of investment decision, whether to invest money in this business or not, or whether to take out your already invested money. The second thing that they do, the second type of information that they're looking for is cost analysis, that how much cost is being incurred. So this is usually owners and investors, owners, investors, and lenders, perhaps. Acha, over here, I didn't mention lenders. The users of financial information, they also include lenders. Whenever you are going for borrowing, for example, you want to take a loan and you go to the bank, they'll always ask you for your financial statements. And from those financial statements, they'll see whether your business, it earns enough profits, which would enable you to pay back the interests and the principal amount that you are asking for. Okay. So we mentioned that we are looking for investment decisions in the from the income statement. We are trying to make a judgment on whether to invest money in this business or not. We are trying to do a cost analysis, whether the business as compared to last year, has it increased its costs or has it controlled its costs? How has it done in comparison to other businesses? Then based on this, we are trying to project something in the future as well. So basis for future forecast, that the business, its profit has been increasing 5% every year for the last 10 years. For the next year, I can also expect the same. It is logical to expect, to have such an expectation, right? So basis for future forecasts. Similarly, sir, we can also use the income statement to make comparison, that two businesses which are in the same industry, how much are their absolute profits and how much is their profitability. Okay, so profitability, I think you might not be able to fully understand that right now. You would perhaps understand that better when we get to the portion of ratio analysis. But bear with me, we'll discuss that over there. That what is the difference between, do you know what is the difference between profit and profitability? Uh, See, one business, it made a sales of 100 million. So profit, one business, it made a profit of 100 million. The other business, it made a profit of 200 million. Which is better? Which is better? Yes, sir. Which of the two businesses is better? The second one, 200 million one. Okay. Now, if I give you an additional piece of information that for the first business, their revenue was just 200 million, and out of those 200 million, they earned 100 million as profit. And for the second business, their revenue was 1000 million or 1 billion. Out of 1000 million, they were just able to generate a profit of 200 million. It means that first business, it has a profitability ratio or profit margin of 50%, and second business, it has a profit margin of 20%. That whatever sales it makes, only 20% of it remains as profit. And for the first business, whatever sales it makes, only 50% of it remains. So whichever business has this percentage higher, that already this is the profit earned, but on what sales, that also matters. Okay. If I'm able to generate more profit with fewer sales, I am better than if I'm generating more profit, but my sales are also comparatively very huge. So the trick or the better thing to do is to extract as much profit out of revenue that you're making as possible. We'll see further details of it in the upcoming chapters when we get to that topic. Acha. One last thing. This is largely how the accountants they see the financial information and how they see the income statement. The economists they have a slightly different way of looking at the financial statements. What we accountants usually call break even. So for economists, they usually use the term normal profit and abnormal profit. So normal profit is the point where the business it is earning enough so that it's matching its costs. So in accounting terms, if you're earning zero profit, that your revenue is equal to your cost. Total revenue is equal to total cost. The economists say that you're earning normal profit. Okay. And if you earn anything more than that, so for example, if your total revenue it exceeds your total cost, the economist would say that now you are earning abnormal profit or supernormal profit. Both terms are used. Okay. Then the economists they say every business it must earn at a minimum this normal profit, which is that their revenue it should be equal to total cost. If you're not earning normal profit, if your profits are less than, if you whatever you're earning from the business it's less than the normal profit, then you would quit business. You won't be able to continue in the long run, which makes sense. If your revenue over the period of time it's less than your total costs, which in other words in accounting terms which means that you are earning losses, so nobody would like to continue a loss making business indefinitely, right? Make sense? Any questions? A lot of information to wrap your head around. Okay. Chalo. Do you do reading for these things after the class? You do. Good. Achha, let's quickly do the MCQs and the questions I expect you'll be able to do on your own. Or if not, we'll discuss them tomorrow, right? Just a second. What? Uh, there is this website. I'll send you the link. It has all the books. Acha ji, now coming to these questions. Yes, sir, your answer for the first one. Very good. Question two. Yes, sir, it's 20,500. Where did we write assets in a comprehensive statement of comprehensive income? Assets aren't here. Where is the value of assets? This is statement of comprehensive income. It is used to make investment decisions. The value of assets, it's there in the statement of financial position. Both C or D, but yes, C in our circumstances from what we have studied. Acha, statement of comprehensive income show you'll have to find missing figures. What is meant by operating profit? Hmm? Mm-hmm. All right. What? No, no. It hasn't been that long. Acha, we go through the next chapter as well right now. You're up for it, right? Okay. So the next statement, once we have looked at the statement of, and by the way, have you taken down the notes for the previous things that we have done? Costs, break even, cost, and sources of finance. Okay, I'll erase that. Acha, the next thing that we have got, sir, is a statement of financial position. Statement of financial position. Let me write that. Do we have a class on 23rd? I mean, you'd be there for the class on 23rd, right? No? Okay. Hmm. Okay. Okay. No problem. So you also missed your class. I mean, last week you missed the chemistry, and then on Sunday again. At least, always, whenever you see the message, just type a reply. Late or soon, whenever you see the message, just reply. Acha, all right, all right. Acha, statement of financial position, we know they are drawn on the principle of accounting equation. So for accounting equation, we said that all assets they are equal to equity plus liabilities, right? Acha. Then we'll take one step deeper look into the equation. Now assets, we can break them down into either non-current assets or current assets. So instead of assets, I write non-currents plus current assets. These are the total assets, right? And for liabilities, I write non-current liabilities and current liabilities, right? Hmm. We went through this thing earlier on as well, yes. But perhaps all this information is very new to you, so we need to go through it a few times before you fully understand it. Acha. For equity, what does it contain? It contains capital, the amount that has been invested by owners in the business. From this capital, we deduct drawings. Drawings is the opposite of capital. Capital is when you invest money in business, and drawings is when you take money away from the business. The owner, they withdraw their investment. Okay. And if I add to that accumulated profits, whatever profits you have earned over the span, this is what equity is. These three items, I mean, there could be other items, but these are the three main items that concern us. For assets, we know they can be bifurcated into non-current and current assets. And for liabilities, we know they can be bifurcated into current and non-current liabilities. Minus drawing, capital minus drawings plus accumulated profits. Acha ji, so this is as much we will bifurcate things, and now we just need to understand what these things are. For non-current assets, we studied that these are the assets, long-term assets with the first of all, what is an asset? Asset is an economic resource that will benefit the business in future. Any resource that I hold, I own, I control, and this resource, it will benefit me in the future, that is an asset. Easy? Anything that I have to pay back to someone outside the business, that is my liability. If you need to take these definitions down, I'd recommend that you do. Okay. So assets, again, all the economic resources that a business owns and controls, which would benefit the business in future. And liabilities are all the amounts that a business owe to people or group of people outside the business. All the economic resources owned and controlled by the business, which would benefit them in future. For liability, all the amounts that a business owes to people outside business. People outside business. Acha ji, equity is the residual interest of owner in business. Write it down, then I'll tell you what it means. Equity is residual interest of owner in business. Noted? Acha ji. What it means, residual interest of owner in business. I've got my accounting equation. Assets are equal to equity plus liabilities. So if I rearrange it, I will have assets minus liabilities is equal to equity. So it means from all the assets, if I pay off all the liabilities, whatever remains in the business, it's the owner's possession or owner's interest. That is the interest of owner in the business. That is the stake of owner in the business. From all the assets, if I pay off all the liabilities, whatever remains belongs to the owners of the business. Simple. Acha. So now we have understood what assets are, what equity is, and what liabilities are, right? Acha. Now we'll quickly recap what we discussed before regarding the assets, capital, and liabilities. So, sir, we mentioned that non-current assets are the assets which would benefit the business in long run or which would convert into cash after 1 year. All assets eventually they convert into cash as in they provide benefit in the form of cash. Yes, eventually they become liquid, they become liquefied, they provide all the benefits. Acha ji, convert into cash after 1 year. These are non-current assets, and the current assets they are the one which convert into cash within 1 year. So either they are cash itself right now, or they would convert into cash within 1 year. So examples of non-current assets are generally um, land, if a business owns any, buildings, vehicles, machinery, equipment, all these things. These are non-current assets. Acha, for current assets, the examples are cash and bank account itself, then inventory of the business, then accounts receivable or debtors. Okay. Acha, let's look at the liability side now. For liability, we said that there is non-current liabilities. So non-current liabilities is the amounts owed or the liabilities which I have to pay back after 1 year. Liabilities to be paid back after 1 year. Noted? Acha. And similarly for current liabilities, we would say these are the liabilities which have to be paid back within 1 year. Right? Let me know when noted, then I'll give you examples. Acha. Bank loans, long-term bank loans, they are usually examples of non-current liabilities. Acha. Leases for multiple years. If we have bought any asset on lease, that is an example of non-current liability. Do you remember debentures we discussed when we discussed sources of finance? Hmm. So when a business it needs a lot of money, it cannot raise capital, so it raises that money in the form of loan, but it's not taking loan from any single person. They distribute that into small instruments, and hundreds and thousands of people they buy those, and they give business loan, and then eventually the business it pays them back. So these are all examples of non-current liabilities. The common examples of current liabilities they include trade payable. So if you have bought anything on credit, the amount you owe to your suppliers, that is your current liability. Bank overdraft, if you have drawn amount of more than your bank balance, or if you have a negative bank balance, that is your current liability. You have to settle that within 1 year. You usually do. Acha, trade payables, bank overdrafts, other payables, for example, other than trade, if you have bought an. Hmm. Acha, another interesting thing is that out of these non-current liabilities, obviously you have to pay them after many years, but eventually a time would come when you have to pay them the next year, right? Or if you have, so for example, you took a loan from bank which you have to pay back after 20 years, right? Are you following me? So after uh, 24 years, you have to pay it back after 20 years. So after 19 years pass, the next year you have to pay back this bank loan, right? Are you there? So when you have to pay back this loan the next year, then it becomes the current liability. This is something that's a bit beyond what's discussed in your book. So if you've understood anything till before it, then it's fine. Acha ji, this understood, sir. Next thing that we'll talk about is ये हो गया, ये हो गया. अच्छा, financial statement of financial position. It can be drawn on two formats. I'll show you both of these formats. And acha, equity is sometimes also called net assets. Noted somewhere. Equity is also called net assets because it means assets minus liabilities. From assets, I'm deducting the liabilities. So I also sometimes call it net assets, right? Acha, then sir, what else? Sometimes in the balance, in the statement of financial position, we have an asset with the name Goodwill. What is Goodwill? Goodwill, this asset, it only appears in your books if you have purchased another business. All right, sir? Acha, what happens if you, for example, let's take example of any business, let's take Emirates, the airlines. Acha, if somebody they want to buy the whole business from the king or prince, whoever, what would they say? They'll say that this is the value of all your aeroplanes. This is the value of all your physical infrastructure. From this, I'll deduct the liabilities that you have to pay. Here is the money. Would the king or the prince sell them for that amount? The business of Emirates? They won't. For the reason, huh, for one reason, and even if they were, even if the asset was for sale, even then they won't sell it at this value. Why? Because they'll say that we have been in operation for a number of years, we have got global prestige, we have got a brand name. That name is far more, far bigger an asset than all these physical assets that you see. So we'll charge an amount over and above what these physical assets cost. Okay. So for goodwill, you can write that this is the value of a business over and above its net